If you run a not-for-profit in Connecticut, there's a question that comes up more often than not. Do you really need an audit? It's kind of a very vague question, but it's an important one. So the answer depends on really monetary thresholds. Missing them can create real problems for your not-for-profit. It could also potentially revoke your not-for-profit status if you're not in compliance. My name is Derek Jan. I'm with Francis S. Infurchia CPAs. In this video, I'm going to walk you through Connecticut-specific audit requirements, federal, when federal rules apply, and also the real risks that not-for-profits face when they get this wrong. So let's start with the Connecticut requirements. If you have a nonprofit and it's registered with the Connecticut Department of Consumer Protection for charitable solicitation, your audit requirement really depends on your annual gross receipts or your income. So here's how it generally breaks down. So if your organization brings in anywhere under $500,000 in gross receipts, you can typically just get by with a submission of an internally prepared financial statement. So you can just log into your QuickBooks, get your profit and loss statement, your balance sheet, and really upload those to the state portal for submission. Now, between $500,000 and $1 million, this is where it changes. So you will eventually need a review report from an independent CPA. Now, in prior videos, we have talked about really the differences between a review and what an audit entails. And really a review, as a reminder, is significantly less in scope than an audit is. It's also less timely and less costly to execute. Once you exceed $1 million in gross receipts, that's really what triggers the audit threshold. So once you have your audited financial statements or reviewed financial statements or internal financial statements for lesser gross receipts, really what you'll do is upload those with your charitable annual forms that you need to submit to the state of Connecticut. Now let's layer in federal funding requirements. So under the uniform guidance, really the threshold here is $1 million, but it's not in gross receipts. It's actually in your expenditures. So really what is the not-for-profit spending their money on? The state is really interested in that. So, another major difference here is that when there is federal spending over $1 million in expenditures, really you're going to trigger what's called a single audit. So a single audit is quite different from a regular financial statement audit that's under US GAAP and FASB. So what that means really is it's different really in its form and function. The federal government is really looking to see how you're spending that money that they're giving you with a state funded or a federal grant, right? So they're going to grant you money. They want to know how you're spending it essentially. So here's the distinction. So the state of Connecticut really looks at your gross receipts. Anything over $1 million is required audit, and same thing over $1 million in federally expended money will get you triggered for a single audit under federal uniform guidance. So it's possible to trigger one or both of these actual triggers, right? You can trigger the one if you are a not-for-profit that spends, if $1 million or more or has $1 million more in gross receipts, that will trigger your financial statement audit. You may only trigger the single audit threshold of $1 million in federally expended expenses, and then you actually may trigger both. You could actually have gross receipts in excess of $1 million, and you'll be on the hook for a financial statement audit, and then you may also trigger the uniform guidance federal single audit if you're actually expending $1 million or more of the government's money. So you'd be on the hook for two different types of audits there. So even if you don't meet any of these requirements, the state of Connecticut or the uniform federal guidance, you may still trigger an audit somehow. It really depends on who the user is of your financial statements. It really depends if you have debt that is serviced with a lender, or if you're receiving grants and you're a not-for-profit and somebody is granting you a lot of money on a conditional promise or a contingency that you have an audit that goes along with that donation or that contribution. So it really depends on who your audience is and who's looking to really look at your financial statements to understand the audit requirements. So other examples, really, there could be a private foundation that may require audited financials before renewing the annual funding. Banks and lenders often expect financial statements audited or reviewed. So that would be your typical lender if you're just looking for a small personal loan for the business. So really, let's just not ask the question, is it required, right? The answer is really, it depends. It depends on your business needs. It depends on how much money you're making. It depends on how much money you're expending. So what are the risks, really, of not having an audit versus having an audit? First off, there's state compliance issues. Late or incomplete filings or not filing at all could really, with the state, get your license to solicit charitable donations taken away. And that really is the driver of your business. Most not-for-profits really make their income through donations and private contributions. So second is funding disruptions. As I stated earlier, certain not-for-profits may be receiving either federal funds or private funds, gifting contributions, or different types of funding. A person may say, you're not doing the audit as we expected, and they could take that funding away. Third is really credibility risk. As a not-for-profit, you don't really want to be blacklisted, right? You want to really do the right thing. You want to be ethical. You want to abide by your principles and your governing overarching mantra, if you will. So, really, individuals may not want to donate or take part in your not-for-profit if they know that you're not really doing things the right way. So here's the key takeaway. Audit requirements for not-for-profits in the state of Connecticut really isn't a one-size-fits-all approach. You really need to look at your total gross receipts or your expenditures. You have to look at your federal funding levels and any specific grant or lender requirements. And, really with anything in life, it's always important to read the fine print. So, read your lender agreements, read up on any different, state or federal audit requirements, or you can contact us and we can help you out in making some of these decisions. So if you own your own not-for-profit, if you sit on the board of a not-for-profit, any board members, or if you're just interested in learning more about starting your own not-for-profit, you should really give us a call today and we can help you discuss some of the options that are available in terms of lending and financing, as well as some of the requirements that the state and federal levels require of those financial statements. Thank you.